In this video, we're going to be talking about trading channels. Stay tuned. Hey traders, a very warm welcome to you. Okay, so in this video, we are going to talk about trading channels, different types of channels, what they are, how they're formed, and most important of all, should I say, how we trade them for profit. Okay, so let's start out with the pretty standard channel, which is a horizontal channel. So you have price kind of chugging along, doing this, makes a high, makes a low, makes a high, makes a low, high, low. You get the idea. A channel is formed when we draw a line across the highs, touching the highs, and a line across the low. The important thing about a channel is that they're parallel, and most charting packages will allow you to do a parallel line just to extrapolate that line out. So the idea is, in fact, before we talk about the ideas of trading, let's look at other types of channels we've got. We also have one that we can call an ascending channel, if I can draw it, and stay tuned for the end of the video where I put some chart examples, like real life examples of these, by the way, guys. We have the tops drawn together and we have the bottoms drawn together like that. So we have an ascending triangle, and then we basically have exactly the same but in the mirror. So we have price moving down, touching lows, pushing back up, struggling to get down, and just doing this. So basically you can see it's a symmetrical pattern pretty much where price is contained within a boundary. That's the key important aspect about this. Now these are all similar in terms of their pattern. You could twist them, but there's some slight differences. Let's talk through the differences. Okay, so if we had this kind of trending channel here, pretty much what we're saying is, hey, price is banging its head against a resistance. It's got a resistance level on there and it's got a support level below it. Can't go any lower. In other words, I always like to look at things as supply demand imbalance. The supply, we've got a lot of demand coming in. And for whatever reason, that balance tips, whether that demand backs off or whether some more supply comes in. One or the other has tipped it so that we're pushing back down to the lows. Then we get to the same low point here and we just don't get any further. There's just not enough momentum. There's not enough supply coming in. There's not enough selling hitting that, or if there is, buyers are soaking it up, however you want to frame that. And that's happening again and again and again and again. And same with these two things here, but slightly differently. We have a sort of slight bullish bias to this. In other words, prices continue to make higher highs, but there's still this kind of very symmetrical, very guided channel as we go up. Okay, so important thing is, how do we trade it? What's the deal? Let me get a different color pen. Let's go with, we'll go the red one and we'll go with a bit of a green. Okay, so what we would generally do, well, the textbooks tell you to do with a channel is to sell at the top of a channel and buy at the bottom of a channel. Okay, so you treat it as support and resistance and you trade it accordingly. So I mean, you would assume that we've already had this kind of mapped out for a long period of time before we get this, because you're not going to know that's a channel at that point, are you? That's the bit of a fallacy with textbooks. You say, oh, there's a channel, you sell there, but at that point you don't know. So we'll assume that this is kind of the end of a channel that we've already really recognised that these are kind of parallel highs and parallel lows. So the theory being is that you'd sell short here, you sell short here, or you're going to cover here, you'll cover your long, close your long here, you're going to buy here, you're going to buy here, you're going to buy here. That's the kind of theory behind the channel, is that you're playing a counter trend mean reversion play with the channel. Now, if you're really, really clever, you can kind of do both. You can kind of sell short here, reverse and go long, sell short here, reverse and go long. That's probably, let's put this in the real world, guys, that's probably not going to happen. Your best bet is to align yourself with your kind of feeling of, you're bullish or bearish on this, or you just want to align yourself with one side. I think when you try and be too clever and reverse and try and catch everything, that's when things go wrong. Just from personal experience, if you're out there and you're very good at reversing and making kind of double on both moves, then fair play to you. But I prefer to align myself with one and wait for my specific entry. So I might say, okay, I want to short the upper end of this channel. I'll wait for the tag, wait for the sweet spot, really, really focus on it, and then hit with a short and then look to cover. Now, one thing I might also do is I might kind of draw a mean level or a midpoint of the channel and use that as a way to scale out some of my positions. So if I'm fading that channel high, let's say I'm going short of the high, I might wait for a kind of tag of the midpoint of the channel to scale off some of the positions to just sort of pay me for being right, and then look for the test of the lower channel to kind of scale the rest off. Or if I'm being a little bit more ambitious with trades, which I kind of try to be, to look for those real aggressive winners, is I would wait for, I'd probably hold some cover some at this point, and then wait to see if actually I got a nice leg in on a potential break here. And if I hadn't, then perhaps I would end up just dragging my stop to this point anyway. So worst case scenario, I'd have maybe half off here, quarter off here, quarter off there. If it goes lower, then I've got a nice little runner. Just some ideas for trading the channel. Okay, the other way we can trade it, and we can do this either with this as well, guys. Although I would say that you're probably better off aligning yourself with the long side on an uptrend channel and buying at these points here. Let's get the green. Let's keep it similar. Buying at these tags here as opposed to going short highs, because often it might kind of stretch a little bit, and you want to try and align yourself with the trend if you can. Not to say that it's not feasible to be shorting these, but I would always recommend doing that. And then going short here instead of kind of buying these lows here. Okay, so that's the mean reversion play with the channel. And just before we move on to the breakout play, just want to point out, this is, obviously this is very simplified here. Price rarely does this. There are some examples we'll bring up in a second. There are some examples where you do have that, but generally speaking, it's going to chop around in it. It's going to do this. It's going to kind of revisit the high. It's not going to be just a nice clean up and down for you. It never is. So having that ability to take some off at the mean, at the midpoint, is a nice thing, because you might find it tags it, messes around for a bit, a couple of days or whatever, and comes back lower. So it kind of pays you a little bit and puts some money in the bank. Okay, so the other way of trading it is we have, let me get my cloth and let's get rid of this, because we're flipping now from a mean reversion play into a breakout play. Now the theory of the breakout of the channel is we're waiting for a break to buy the break. And in fact, I'm just going to remove this one here so we can use this one. All right, let's go. Here we go. Market's done this and off we go. So we're looking to go long as it breaks the channel. So that's the theory of that trade. It's a range expansion trade. It's nothing to do with mean reversion. It's, hey, listen, when that resistance breaks, it's been so solid because it's tagged it multiple times. Now we're going to buy a break of the push above the channel, and then whatever our target may be, what a strategy for that. Now we can do that, or we can be saying, okay, once it breaks, I'm going to buy a first pullback. That's a little tip for you, something you can do. Or I'm going to buy a pullback to the resistance point of the channel that now comes support and buy it there. That's something we can do, and vice versa. If we break to the downside of the channel, then we can go short on that. And these work slightly better with these kind of ones that are with the trend. We're buying a break to the upside here, we're buying a break to the downside, as they do in the flat. They're saying that you can get some really nice ones. It does depend on the structure of the price before that channel as to how this sets up. And just one final little kind of trader tip for you before we maybe put up some charts is I like to see this with a channel. In fact, you know what? Let me clean this off and put it on a big thing. Hopefully you can still see that's a bit grubby, but okay, this is the channel we've got. I like to see this kind of happen. If I want to line myself with a potential break, I want to see it fake out to the downside first. I love that because it fakes out to the downside. It sucks in a load of short sellers, a load of people who are also buying at this low as well, getting stopped out. So there's a lot of selling hitting that level there. But then what happens is it reverses, comes straight back up and aggressively pushes to the high. That really interests me because it's already tested the level. It's advertised for sellers. No aggressive sellers have hit it. Now it's starting to push up to highs. I'm all aboard that breakout there, or if I'm extra aggressive, I'm going to kind of play it here and go my long at here using my stop here because I can quantify my risk so much tighter. And I've also got a run up for that breakout, and I can feed out some stock or some futures contracts or spread bets, whatever, into those stops that those short sellers will probably have above that level. So that's a kind of way of trading channels. Let's dart over to the screen, and I'll put up a few screenshots of some good channel examples. All right, guys, here we are at the screen. I've found a couple of nice examples for you. Not hard to find, there's a lot of channels out there. Got a US dollar, Euro US dollar daily chart here. Pretty self-explanatory uptrend channel, as you can see. We kind of got into the channel zone here, and like with everything, it's not always going to be clear cut. You're not always going to get the exact kisses of the levels each time, but you can see the broad kind of feel of it. Even though we've got a tag here and a tag here, you can see that this is really keeping stuff in check at the moment. A little tag down here. Well, this is really where it starts off. That I would class as one. Again here, here again. So the same kind of feel is that listen, you tag the uptrend, you tag the upper channel, you tag the lower channel, but you're just keeping broadly within the two. It's like a boundary for price. And if you did a mean, you would see that often, we're tagging the mean and reversing, which brings me back to that comment of trying to scale somehow at a mean. All right, look, another one. Let's look at a downtrend one. Here we go. We've got US dollar JPY daily chart again. You can see nice clear downtrend in the channel, bit thicker this time, but keeping things under control. Yes, we had a little bit of a spike out of it. Obviously, it's going to be based on news, but generally, this is keeping things in control until you get the break of the channel. And then there's your bar, the break of the channel. And then we talked about as well, being very careful about buying the break. In this case, you'd have got away with it. Obviously, waiting for some kind of pullback or some more signal is sometimes preferable, but you can see that it works from time to time. If you go back to Euro, let's go back to the FTSE now. This is a 60-minute, so a little bit of a lower time frame. Hourly chart, nice flat straight channel here. Perfectly horizontal lines, keeping price in the zone until you get the break. So let's get the pen out, tag, keeping things in check. We had a little fake out here. Now this is a little bit earlier than you'd expect to have the break after, but just keep things in perspective, guys. Even though sometimes they come out of the channel, you've got to kind of give it a little bit of leeway. There's a bit of noise there, but things are being kept in this nice tight channel. In fact, it's not that tight at all, is it? I'm talking about 140 point channel, so pretty decent over a long period of time. Eventually, when we get the break, we get the break. Now look, this is something that's interesting to me, is how quick we move, from the midpoint or above the midpoint here down to the lower part of the channel. Gives you an idea potentially, because the urgency is there, we could break through, and obviously broke through, and there's quite a nice little trade coming from that. Waiting for the pullback to the channel here. Yes, you've got a little bit of juice to the downside, but obviously it's come back in. Again, there's no right or wrong way with it, but keeping the channel in mind perhaps it's going to help you for not just literally chasing stuff too high, or just seeing where other traders are getting involved. That's kind of the whole point of the channels, whether you've got a down channel like in the US dollar JPY daily, up channel here in this Euro US dollar daily, bit tighter, or a flat wide channel as we've got in the FTSE. All right, guys, take care. See you in the next one. Bye bye.